Hello, chart watchers, and welcome to this Friday, February 22nd, 2019 Market Watchers Live Show with your hosts, Tom Boley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, today we got the bulls back in charge again. You can see that the Dow Jones Industrial Average currently up 180 points. The S&P 500 up 16, the NASDAQ up 61, breaking above recent highs. And the Russell 2000 once again having a strong day and leading on a relative basis, up 13 points, not far from 1,600. 10-year Treasury yield, though, under pressure again to the downside, down more than 3.5 basis points, close to 2.65%. This still is a little bit of a problem for the market, for the equity markets, but we've been talking about that. So far, it doesn't seem to matter. Volatility index continuing to drift lower. We're now down below 14, closing below 14. It would be the first time in many, many months. That is typical of a bull market type of an environment, not a bear market. Keep that in mind. Technology continues to run higher. Another breakout today. Technology leading the action to the upside. Communication services also doing well, partly because of internet. As you can see down here, internet breaking up off of this support area and its 20-day moving average after testing that for the first time in about a month. Staples, though, on the other side, really struggling today, down about 2/3%. Kraft Heinz, as you can see over here, just an awful earnings report. A lot of bad news there. We'll talk about that in a bit, but you can see the stock down from over $48 a share down to below $35 today. So nearly a 30% drop on Kraft Heinz. Not good. Intuit, though, on the other side, we've talked about many of these software stocks. Intuit, I know we just discussed recently. I think Julius DeKempenaar and I were talking about it yesterday when we discussed breaking it down, that segment covering technology stocks. Talked about how strong Intuit was and the likelihood that they were going to have good numbers. Well, they had good numbers, and you can see the response very strong. So all in all, pretty good day in the market, but clearly consumer staples taking a hit because of Kraft Heinz. And I tell you what, Mary Ellen, we were joking before the show, but I tell you, when you got bad news like Kraft Heinz has, and they had a ton of bad news. I mean, when you consider everything that they threw out there last night, they missed on their revenues. They missed on their earnings per share. They talked about receiving an SEC subpoena because of, I think it had something to do with their accounting in one of their areas. I can't recall. And then they also said they were going to be recording a non-cash impairment charge of $15.4 billion relating to the Kraft and Oscar Mayer trademarks. And I just kind of was joking, but I don't think that it's really that much of a joke. I mean, they might as well just throw everything out there while they're at it, and just say, hey, we might have E. coli. There might be sexual misconduct charges coming. We don't know, but we're just throwing it all out there right today.
That's right. Just cover all those potential bad bases and call it a day.
Yeah, I mean, it's really bad. I mean, you don't see a company like Kraft Heinz getting hit like this very often. Yeah. I mean, it's a big hit.
Yeah, and one of the headlines says they're lopping $4 billion from Warren Buffett's stake because of the drop.
Wow.
I don't know if I'm sure he has more going on the upside to counterbalance that, but huge.
So
big hit.
No more Oscar Mayer hot dogs with his Cokes, I suppose. Anyhow, yeah, it's pretty rough. By the way, what would you do? I mean, if you owned Kraft Heinz, because the chart wasn't looking, that bad. It's been rallying a little bit here in 2019 before that news. What do you do if you're in a stock like that and you get a big drop? Do you just say, hey, I'm getting out at the open and be done with it? Do you wait and see if you get a little bit of a bounce? We all, have stocks like this from time to time that drops a bomb. What do you do?
I would turn to the intraday, that 60-minute price chart, and just keep an eye on that, because you are going to get some bottom fishers that they're going to see a little bit of good in there somewhere. But overall, that volume to the downside is really quite negative and does not bode well, certainly over the near term for the stock. But if you're looking for an exit, you own it, key in on that intraday chart to give you some clues. You can still use those technical overlays to guide you. As far as currently on that 60-minute chart, it's oversold. So there's an anticipation of some sort of a bounce.
Yeah. Well, good suggestion. I know if you own it, sorry, it's all these kinds of days are never good. That's for sure. When you get something out of the blue like that, and I'm a little surprised. And I'll talk about this in a little bit more in just a few minutes. But when you got a stock that's trading like that, heading into a news, like this, I don't think they disclosed too much of this to Wall Street before this all hit. So that can be a problem too. The mistrust of management. Going down the road. But anyhow, let's go ahead. We got a ton to go over today, so let's jump into the upcoming schedule here. Aaron is going to do a workshop next Tuesday. Can't wait to do that. I think it's based on some relative strength. I don't want to steal her thunder, but I think she was talking about doing that. On Wednesday, the 27th, we have Tim Ordian from the Ord Oracle, and then I will be doing a March seasonality report next Thursday, and that will focus on the following month, of course, March, giving you some idea of some of the trends that we've seen in the past. It doesn't mean that we're going to see them again this year, but at least gives you an idea. It's another tool that you can use, and hopefully help in your trading as we go forward. As far as today goes, we are going to get into the what's hot, what's not. Of course, on Fridays, we always do that with Mary Ellen. There's plenty what's hot. Maybe not so much what's not, but there's still plenty, there's a rotation taking place out there. The 10 in 10, we're going to start with Intel, one of the largest semiconductor stocks. So take a look at the chart, see what you think, and I'll let you know what I think at about 12:50 today. And then we will wrap up with chart breakouts. That should be a pretty easy segment. There's a lot of that to go around, but Mary Ellen and I will share some of the chart breakouts that we're seeing and take a look, and maybe be some trading opportunities down the road. Who knows? All right, let's get into the economic reports today. There were none, so that was pretty quick. Let me go ahead and pull the 10-year Treasury yield up, though, and talk a little bit again about the not-so-good news here. As you can see, we just, yesterday we tried again to get through that 20-day moving average on the yield and pulled back. And I know some of you may be saying, well, that's good. Rates are staying low. But it is one problem is the market is always trying to decide as far as allocation goes, do we allocate toward treasuries? Do we allocate toward stocks, bonds versus stocks? It's that old, it's a cost benefit kind of a relationship. And you in an environment where the market is expected to strengthen, the economy is expected to strengthen, you would expect money to rotate away from treasuries and into equities. Equities will benefit more from a stronger economy. So when the 10-year Treasury yield stays down like this, it's just a warning sign that the bond market is not seeing a lot of economic strength ahead, not what the stock market is telling us. And usually when these two butt heads, I tend to really pay attention to what's going on in the Treasury market, bond market. So I don't like it. I don't like when we're seeing this move to the downside here in the 10-year Treasury yield. I would like to see a breakout, because that would begin to tell me that money is rotating away from defense to offense, which is the stock market. So mixed signals here, and I think it's just worth keeping an eye on. As far as earnings go, we can pull those up. Kraft Heinz, that's the big news story. But I tell you what, that was a bad one. There were a lot of really good reports that came out last night. And as you go down through this list, already talked about Intuit. That was a really nice report, raising guidance, beating top and bottom line. Trade Desk, Keysight Technologies. Keysight was one that Aaron and I talked about in a final segment, I think it was yesterday, where we were looking at certain stocks and whether or not we would buy or not, stocks that were on the move, I think. And Keysight was one that I was very, very bullish on. And they did report. I didn't know they were going to be reporting earnings, unfortunately. But they did beat, and they gapped up, performed really well, gave some nice guidance going forward. Roku, that stock was under pressure in the fourth quarter. It has come roaring back, having a great day today. Acacia Communications, I didn't realize this one was reporting either, but I had talked about that one on the verge of a breakout. Well, it got it today with the solid earnings report. So a lot of really good stuff going on there. But I'm going to start with Kraft Heinz, because that is really the big story today. And just take a look at the chart. So let's pull that up, take a look. Here you can see Kraft Heinz. First of all, look at the volume. I don't think anyone can mistake that there are a lot of folks trying to get out of Kraft Heinz. And I think that, Mary Ellen made a really good point. I think in the short term, let's see how it closes today. But there will be some value investors. Of course, the growth investors are getting the heck out. They don't, after lowering expectations going forward. Personally, for me, I don't like trading any company that's under SEC investigation. And that is going to be a problem that lingers here for a while. But because the stock was hit so hard, I wouldn't be surprised if we see a little bit of a short-term move back to the upside. Maybe you can lessen the blow a bit if you still own the stock, but it was definitely a very, very weak report. As far as some of the numbers go on Kraft, their revenues just missed a little bit, $6.89 billion versus $6.93 billion. Their earnings per share, 84 cents versus 94 cents. And then they received that SEC subpoena, the non-cash impairment charge. The list goes on, and you can see the stock getting hit pretty hard. Now, on a relative basis, before this news came out, you can see that Kraft Heinz was underperforming its peers and was underperforming the S&P 500. So this wasn't a total shock, but I think just the magnitude of it is what really threw a lot of folks and why there's so much panic and bailing of the stock today. Let's take a look at a few other stocks, though. FLR, Fluor, this is another company, missed on their revenues, did beat on the bottom line. They beat 77 cents versus 61. They guided their fiscal year 19 earnings per share lower, and the stock is going up. So that's telling me that maybe all of the selling that took place. I mean, this is a company that lost 50% of its market cap in about little over 2 months, 2.5 months. So there was a lot of bad news built into that. So now we're seeing that bad news, and the stock is reacting positively. I think it's going to have to get through this 40 level, which is where it broke down the beginning of December. If it can get through 40, then I think it could start to repair itself technically. Right now, I'm going to watch and just see what happens from here. Intuit, mentioned this one, big beat on the top line and bottom line. They guided their Q3 revenues higher. Otherwise, things were in line. Market loves it, and it is part of that software group that I was talking about that has been a strong area of the market. So again, this is a company that's got all the right look to it as far as the relative strength. You got the group software outperforming the S&P. You got Intuit outperforming the S&P, and Intuit breaking out relative to the software index. So this all looks good to me. I suspect that Intuit will continue to lead. It's tough to chase after a big rally like this. I'd wait for a pullback, but this is one I'd certainly keep on my radar. Baidu. Baidu beat on the top line, beat on the bottom line, inline guidance. One of the problems, it's in the internet space, which has not been very strong, and the stock has actually been a laggard within a weak group. So combination there, not good. And even with the beat on earnings, stock really still continuing to struggle. So I pay attention to what the price action's telling me, what the chart's telling me. I don't try to sit back and ask why. Why isn't it going up with better than expected revenues and earnings? I don't know. But the fact that it keeps going down and it keeps underperforming, I don't want any part of it. Let's take a look at Trade Desk. This was a huge report. They blew away by almost 10% revenue expectations. Bottom line, $1.09 versus 79. They guided their Q1 and fiscal year 19 revenues higher. And after sideways consolidating for months, this is a huge breakout with very solid volume. Don't be surprised to see Trade Desk continuing to trade higher over the next 90 days. Let me do one more. Let's take a look at the Roku. Roku beat on the top and bottom line, guided fiscal year 19 revenues higher. It has been performing again very strongly after a huge drop back in the fourth quarter. $76, $77 down to about 26, but it is all the way back up now over 60 again, and it looks like it's heading back to challenge that September-October high around 77. All right, Mary Ellen, I know that we took a look, I think the last time you were on it, under the radar stocks, and I know you've got some of those you wanted to take a look at. What do you have?
Sure. Yeah, what we can do is just take a look and see. Last week, we covered stocks that each of us thought that you viewers may not be aware of under the radar. and we can just go ahead and revisit some of those. And the first stock that I had mentioned was called the Meet Group. This is an online venue, and it allows people to connect. They have streaming services. For those of you familiar with Match.com, this is a smaller version, and it attracts a younger audience. So we can take a look at the stock here. This is MEET. I have a couple of overlays, and you can see the stock is continuing in that uptrend very nicely. It's up almost 7% for the week. Still looks quite constructive. Another stock that we can look at very quickly that was mentioned, IIPR. This is a REIT stock, real estate investment trust company, and what they do is they provide space for cannabis related products that are legal. So let's see if I can pull up that particular stock here. It is not coming up, but the stock is up about 10%. It's in an uptrend. We know that a number of the REIT stocks are continuing to outperform the broader markets. And then one last stock that I had mentioned, it's a very small medical stock, and they deal with genomes and cancer treatment. NEO is the ticker symbol, and the stock is up almost 8% this week. Also, you can notice I have a weekly chart up here. The stock is breaking out of a multi-month base, and we're getting some pretty good volume there. The RSI and the MACD are trending upwards. So some of these smaller under the radar stocks appear to be well worth visiting.
All right, I've got a few as well from last week, so I'll go ahead and jump in and show you some of those. Some of them very strong, others have pulled back quite a bit, so let's take a look and see what they look like now. First is Agile Therapeutics, AGRX. Stock definitely over the past week has continued to weaken, but it is down close to that 20-day moving average. Also, after the gap up where the volume picked up back here on February 11th, the sell-off that day went back to about 90 cents, and that's exactly where we're sitting right now, 91 actually. So this is actually an area where I would not be surprised to see some buyers come back in. It is only 91 cents. It's a small company. I mentioned last week, very, very aggressive play, but this is an area where I would not be surprised to see a quick pop, possibly back up to this 115 area. And on a 91-cent stock, that's a nice return. But I would not get, build too big of a position on a stock this small. Because it can be extremely volatile. Who knows when news comes out on something like this as well. Diebold really was strong last week. Mentioned the big breakout. I think this was an earnings-related breakout. And over the last 5 days, the stock has gone from it's gone up another 15% or so, probably from 7.25 to above 8.5. So Diebold has continued its move to the upside. Very overbought. I certainly wouldn't chase it, but a pullback could still be buyable down the road. AGEN, this one did pull back pretty hard, actually, losing its 20-day moving average. Volume picked up. But if I look back to where it broke out from here, from the December high, which was about 280, the low 2 days ago back on Wednesday went just below 280 and is starting to strengthen again. So close below 280, I'd be very concerned. Otherwise, I would think this one's still got a shot to make another move to the upside. Zixi, I believe this is in that software space, small cap, continuing to move higher. A lot of great volume coming in. So I mentioned this one is maybe under the radar. You might not be aware of the stock, but look at the last 5 days. It has continued to move higher, probably up about another 8% or so this week. And GKOS has done very little, kind of sideways since mentioned it a week ago, but I think the overhead resistance level continues to be worth watching, right at about $70. A breakout above that on increasing volume would be very bullish. NVCR, it has kind of, just kind of gone sideways here in the last 5 days. And as it's moved up and challenged this overhead resistance, there is a negative divergence in play. Lower PPO, higher price. So unless we get a big volume breakout above 54, I'm a little bit more cautious on this one in the near term. But a big volume breakout would be bullish. And then finally, the last one I think I mentioned was Denny's. I think last week it was down around the 1750 area. It had gone sideways for a while, but then broke out above 1740. and that level has been holding on pullbacks. It is starting to strengthen again, so it's beginning to show some outperformance. It did gap down with earnings, though, at 1811, and 2 days later, the high was 1812. Today, it hit 1809. Needs to get through that 1812 level, but if it does, then look for that 1850, and that would be a big breakout. And by the way, Denny's part of a very strong restaurant and bar group. It was strong in 2018, has been lagging in 2019, but I am seeing some bullishness in this particular chart, waiting on a breakout. We might be getting it today. It's right up against major resistance. So if the restaurant group breaks out, that's where a stock like Denny's, I think, could do well. But now it is time for the what's hot and what's not. So drum roll. Well, we don't have one of those. But Mary Ellen, take it away. It's all yours.
Bring out the fanfare, yes. And so this week, what's hot, what's not, very similar to the last, I would say, 8 weeks now, where the broader markets are just showing unfaltering strength for the most part. So there is an awful lot on the what's hot side. So this week, I'm going to be covering areas to give you thematic ideas of where you might want to focus your efforts and your energy. And then also market cap wise, we're going to cover a lot of small cap stocks really outpacing. And of course, their smaller prices, it allows them to advance faster. So let's go ahead and get started. This first area I'm going to be taking you to is solar energy. And really, it's not just solar, it's alternative energy. And it's really been picking up quite a bit lately. This first one we're looking at, the ticker is DQ. This is a China-based solar energy stock, and you can see that the stock is up about 26% this week. And what we are seeing here with this particular stock, they did come out, their earnings are not due until next week, but the stock drop here had everything to do with actually back here, China came out and said that they were going to discontinue their subsidization of these solar companies. But since then, they have come out and announced that they are going to continue to assist these companies as they develop new products into next year. So that those subsidies remain in place. The markets like that. Take a look at the RSI trending upward, MACD trending upward as well. We're looking at a weekly chart. It's just poised to turn positive here. So despite this significant move here, they are due to report next week. You want to take a look historically at what these types of companies are capable of as far as upside action. Take a look at a US-based solar company, the next one that we can take a quick look at, and the ticker is PLUG, and this is Plug Power. Not quite as dynamic looking in the sense that the stock is just now potentially breaking up above this 200-day simple moving average. The stock's up 9.5%. They just announced that they are starting production of a next generation fuel cell, which is expected to be even more powerful, more efficient. So what I would like to see with this stock is a more decisive break up above that 200-day simple moving average. We do have that RSI up there, positive territory. MACD had a positive crossover, but we're not up above zero yet. So you want to look back historically at this type of action for potential more upside. One last name in this space for today, SPWR. And certainly for those of you familiar with alternative energy, there are a number of others. But for today, we are going to be looking at Sun Power. And these guys came out this week with their numbers, and their earnings missed, but their revenues were up. Actually, they came out with their earnings last week. The company's doing a lot in the way of trying to restructure. They've lowered their debt. They are trying to partner with other alternative energy manufacturing facilities to help them provide solutions, but we can see it's not really that dynamic looking. It is still trying to reverse this multi-year downtrend of the stocks in this space. There certainly are more viable alternatives. So let's go ahead and move on to another area that has picked up quite a bit this week in particular, and we can look at some consumer-related stocks. And the first one I'm going to be pulling up is Marriott, a well-known company. It's up over 6%. And they did come out with news this week. They are partnering with Manchester United certainly one of the largest fan-based UK soccer teams. And they're going to do a global marketing partnership. It's going to give Marriott Rewards members really unique opportunities for experiencing. You could experiences with Manchester U. You can be an announcer for a day, that kind of thing, where they can come and bring you in and meet some of the teammates. Marriott is due to report their earnings next Thursday. What I like here, again, I do key in on this, but you'll see the relevance. The stock this week has broken up above that 200-day simple moving average. It's pulling this 50-day red simple moving average up. RSI is positive. MACD had that black line up through the red positive crossover, poised to break up above zero, which would be even more positive as the stock continues to potentially form the right side of a base. Another consumer stock, they came out with earnings this week, is NCHL. This is Norwegian Cruise Line. And let's see if I can pull this particular stock up properly, because they did come out with numbers that were really quite good, and the stock is up 5%. And let's see if I can, not sure why it's not pulling up, but I will tell you that they had very, very sound numbers. They came in above estimates and a lot going on there. Let's take a look at another consumer. Sure.
I think, was that NCLH?
Yes, that's what I thought. Oh, you know what? I had the H and the L backwards. Thank you so much, Tom. NCLH.
Yeah.
Oh, there we go. Super. We can go ahead and pull that one up. There we go. Thanks, Tom. So we can see this gap up on their earnings report. And the company, they had a couple of headwinds going into their earnings number. A lot of these cruise ships are very reliant on oil, of course, and the price of oil is going to impact. And we know that oil prices back in Q4 last year dropped significantly. So that's one reason why the stock is up. But they also have a new 4,000 passenger Norwegian Bliss ship that was added last April. Huge bonus to their earnings. This spring, they have another cruise ship that they will be adding to their fleet. So good times ahead for this stock. We can see that gap up. It is a bit, we're looking at a daily chart, it is a bit overbought up here, up above that 70 with the RSI, but your MACD is still very much in positive territory, and the stock looks just fine. One last consumer-related stock is GRMN. This is Garmin, and for those of you that are familiar with this stock, years ago, they were well known for their GPS. Every car would have a Garmin in there to help them guide them to get them to their destination. And let me see if I can get back over to here. And we can see this stock. So what we are looking at here is this huge bump up upon the release of their earnings. The stock gapped up. It's over about 16% for the week. They came in ahead of earnings and sales. They had a wonderful holiday season. The largest source of growth for them is what's called adventure or wearable technology, fitness trackers, dive watches, GPS or mapping technology for hikers. So the stock had this huge gap up. We can see that it's still continuing to advance beyond this initial gap up, and that you can tell very well may occur when you see these gaps up on big volume. The RSI is telling us that it is overbought, but we could still see a little more on this trending upside as investors get in. The prospects for the stock have gone higher. So we can take a look at an area of the markets that have been doing really quite well. Wireless internet, and Tom has talked about that. Technology stocks are picking up. A lot of that has everything to do with 5G related stocks. You may not have noted, but yesterday afternoon, Trump did come out with a tweet talking about the need for the US to really amp up their 5G, even into 6G bandwidth systems. And these for those of you not familiar, we can take a look at, for instance, Verizon is one of the main companies that is rolling out a network, 5G network. And it's really anticipated that these networks are going to help with speed, bandwidth, speed. It's all about getting that data out there faster, the ability to then crunch that data. So here we are looking at Visa, but what I wanted to show you was Verizon.
And you can, I don't think into the 5G. I'm not sure.
they have their own dynamics going on. The stock's breaking out today, but Verizon is one prime example just to get you into that. But let's take a look at some of the other players that are also facilitating with the rollout of these bigger networks. ROG, this is Rogers. The stock came out with numbers. They beat fourth quarter revenues. The company makes circuit solutions for mobile tech, and analysts raised the price target up to 160. We're now at 153, but overall they continue to raise the estimates. Take a look at this volume. We're looking at it daily. The RSI is a little overbought here given this significant move, but we may very well just consolidate here before advancing further because the numbers were just that significant. Another stock that is in this space is UBNT and Ubiquiti. And this particular stock, they supply some of the infrastructure hardware to make the transition to those 5G networks possible. And we can see this gap up. I'm taking you back 2 weeks. The company came out with very strong earnings. This is indicative of what we are seeing this earnings season. When you get these big gaps up on volume, the stock breaks out of a base. Take a look at how it's continuing to advance. This is another 12% beyond this gap up. We're looking at a daily. We are above the 70 overbought, but it can stay up there for some time as this is your 10-day simple moving average. As the uptrend continues, analysts are continuing to revise estimates. And another area within that 5G is fiber optic stocks. And I talked about Verizon. Let's take a look at another IPHI within that space. And this is Infi Corp. And we can see this significant uptick here. This is actually a semiconductor stock, but what they do is they provide solutions for telecom companies to help address bandwidth bottleneck, all about getting that data through faster. The stock is in a very, very confirmed uptrend as it continues to find support above this upward trending 10-day simple moving average. RSI and MACD are positive. Here's a stock that Tom mentioned earlier, ACIA. And the company is gapping up 14%. They came out with earnings after the close. They were above estimates. And they also had earnings and revenues, 52% year-over-year earnings growth. And they management guided higher for Q2. This is all about the rolling out of this new network. And then one last name we can look at here is Ciena. This is the bellwether darling in this particular space. Analysts are continuing to revise estimates higher for Ciena with their ability to provide networks. They are a fiber optics company, but definitely the bellwether winner in that fiber optics space. Let's go ahead and move on and take a look at some software stocks. It's been another strong week for software. And for those of you that follow the markets closely, follow this show, you'll know that each week we do tend to have a lot of software stocks because that is an area that is continuing to be vibrant, because certainly cloud-based software, the ability for, this is an example, Cadence Design, CDNS. They came out with earnings and revenues that were ahead of estimates, and the company guided higher for the remainder of this year. So these Cadence works with artificial intelligence, cloud, data centers, and then 5G also drove strong design activity. So you'll see a lot of themes among these technology as far as where the bigger faster movers are. Here's another software, Pega Systems. You can see this nice 11.5% move. We're looking at a weekly chart. The growth for the company when they announced was kind of negligible, but what management did is they cited the migration of their clients to an annualized subscription base. And of course, the street likes that. These annualized subscriptions means income that can be more steady, more counted upon. So we can see this RSI is trending upward above that net neutral 50. MACD had that crossover, but now it's going up above zero. The stock is poised to break out of a 4-month base. So I would keep an eye on this one. We have time to look at one other stock within software for this for this week. This is a smaller cap one, and its WK is the ticker symbol. Let's see if we can go ahead and pull that up. And this is another one that is going to be earnings related. Workiva, and you can see the stock's up 14% on big numbers. They reported earnings 90% ahead of estimates. Analysts continue to revise their estimates higher. And we can see on this weekly, despite this significant move, it's only now just slightly overbought. So I would take you to a daily, and we can maybe get a bit more in the way of perspective for this stock. And while it is overbought, we can go back historically and see that it can remain on this RSI above overbought for any length of time. So we very well could easily see more upside. Let's take a look at, I think that's the last one on software. So we can certainly move on here and take a look at some semiconductor stocks. And this is an area historically that has been really quite hot of late. And it's really interesting because a lot of semiconductor stocks peaked last August, really fell out of bed, but we're starting to see some bright spots here. So it's really quite encouraging. The first stock that we can look at is SQNS, and this is Sequans Communications. Not so healthy looking, but they did report year-over-year earnings. However, they announced a new product, but we can see that this is that downtrend that I talked about, taking you back, in this case, back even further. So the stock is trying to turn around. And for those of you that are bottom fishers, you want to get the stock down before it advances. Really, you're going to want to see two things: a break above this 50-day. We're looking at a daily price chart. That's your first positive signal. We can see that that failed. Now, your next possible area of resistance is going to be this 200-day simple moving average. It's only a $1 stock, so you're going to get these bounces, highly volatile. But overall, you are going to want to see a break above that 200 before the stock has a chance of continuing to advance. Let's take a look at a bigger stock within semiconductors, KLAC. And this stock, you can see, had that break. So I talk about these turnarounds. You want to bottom fish, head fake, finds resistance at the 50. Now it's free to advance. It's up above that 200-day simple moving average, finding support at an upward trending 10-day simple moving average. RSI is up above this net neutral 50 in positive. Take a look at this volume, and this has everything to do with earnings and revenues. The estimates have been revised higher, and the company received antitrust clearance for the acquisition of Orbotech. So the stock is much freer to advance. And quickly, I'm going to pull up a weekly chart, talk about stocks coming out of bases. And right now, that would take us up to this 120. The stock's at 1615, and a break above that would be even more positive, as the stock could very well advance even higher. Very quickly, I'm going to move on here to retail stocks and a couple of names that are worth noting this week. The first one is a $1 stock, but I thought it was worth noting. A lot of you may be familiar with Pier 1. PIR. This is another potential turnaround. The stock actually is up 38%, and that has everything to do with this being such a low priced stock. But realistically, you're going to want to look at the earnings on this, and they are projected to be negative for both this year and next. While this may be compelling, again, I am going to want to see a break above that 200 before even getting remotely interested. This is a weekly chart. Your RSI is not quite positive yet. Let's take a look at another one This is a company that also reported earnings. Lazy Boy up 14%. Their earnings, they saw 137% year-over-year earnings growth. And it has everything to do with their retail segment. They doubled sales. HVT is another furniture-related one. This stock is up about 14% now. They came out with earnings 25% above estimates. More importantly, analysts revised their earnings estimates for 2019 higher. So this is another one that could very well break out of this multi-month base, RSI trending upward, and your MACD. So we can certainly move on to other areas that are hot this week, and a lot of heavy machinery, heavy construction, industrials, materials. So I'm going to get quite selective here as far as the names that we're going to look at. But within some of these heavy machinery, we can take a look at some of the bigger winners that appear to potentially have more upside. The first one that we can take a look at is Titan International. Now, this is what you're going to be seeing in a lot of these heavy industrial machinery stocks that are just now potentially turning. So I talked about turnaround candidates. The stock is up 9%. Analysts are raising estimates. They are an auto and tire truck company, and they are looking for 116% growth for this year. So at some point, it should be able to get off the mat here, but you're going to want to use history as your guidance. I talked about the stock breaking up above the 50, then up above the 200. It's then freer to advance. We're not quite there yet. We're still down here trying to make this turn, but you may want to put it on your radar screen as a potential turnaround candidate. TAX is another one that is in a little bit better of a position. The stock, take a look, you can't really tell, but they did have volume. They are due to report their earnings next week. And the stock this is another weekly. It's actually trading at 14 times earning. And so making it relatively cheap. They do have a yield, about a 1.2% yield, but again, we're still in the throes of this. We'll see how they come out with their earnings next week. One last name we can take a look at here is ALG. This is a farm equipment company. This one caught my eye as being interesting because we can see this potential turnaround again up above that area of potential resistance, up above that 200. We can see the stock historically has a history of being able to advance. They came out yesterday. They are acquiring a Dutch farm equipment manufacturer. Analysts are raising Q4 earnings. They're due to report next Friday. So keep an eye on this one. It looks really quite interesting. Heavy construction, I'm only going to have a few minutes here to cover a couple of stocks in this heavy construction space. First one that we can look at is GLDD. This is Great Lakes Dredge and Dock. Sorry about that. The stock, take a look. It's up 15% on the week. They beat earnings. They came out with them on Wednesday, revised estimates upward for 2019. And I would say that the stock did, in fact, break out of this base, but it's up another 5% today from where I picked it off yesterday. So it's quite extended out of that base, but still not yet over bought. So that's kind of interesting. Take a look. I'm going to show some materials stocks. And the first one is of interest, certainly caught my eye. It's ALB. And this is Albemarle. They are the largest producer of lithium. And for those of you not familiar, lithium is used in batteries, but primarily in electric vehicles. And so the company, the stock's up about 9% for the week. They came out with good numbers. Management cited that global sales of electric vehicles soared 98% during the Q4. And the U.S. growth is expected to be 40% for 2019 growth in electric vehicle sales. Lithium also goes into batteries for phones and computers. But again, this is that kind of turnaround. We're not quite there yet. RSI just poised to turn positive. We're looking at a weekly price chart. MACD had that positive crossover, but we're still below that net neutral. Let's take a look at one other. This is also a lithium company, and it really traded more on sympathy. Take a look here. This one is quite a bit more constructive looking. It's FMG. C, and the stock is up almost 4%, poised to break out of this base. There was quite a bit of fear that the need for lithium would decline, but this one's more positive with the RSI up above zero. Your MACD had a crossover poised to break up. So certainly of the two, that is more positive. Let's go ahead and move on to what is not hot. We have a few minutes to cover. One area is computer software or gaming software. What happened this week is that Chinese regulators, they put the brakes on any new game approvals. So in other words, for these developers of these gaming, these software games, China is not going to be approving any new games. So here's ATVI. You can see the stock has been in a downtrend. This knocks it down even further. TTWO is another example of a stock that is being hit by this announcement. And then lastly, EA. Oh, that's EAT, but EA is another one that we can look at. That, sorry, this one just wants to pull up Brinker, which is a restaurant stock, but just for this last one, we can take a look at EA down 11% on the bad news. And then another negative area, let's take a look at some of these food stocks. Actually, before we do that, there are some internet related stocks that are getting hit this week. This first one is a computer, actually a website designing firm, WIX, and this one is down about 9%, but we're still surprisingly not in terrible shape just yet. They came out with numbers, they were ahead of estimate, but management guided their revenues lower going forward. The stock really was priced for perfection, so you can see that any sign of bad news, and the stock did get hit. We can pull up a daily to show a little bit more in the way of perspective for this stock. This is that gap down below the 10-day, but we're still in good standing. RSI is at that net neutral. We had a negative crossover on MACD, but it's still up here in positive territory. So this one may be able to recover from that big drop. Yelp is another internet-related one that got hit this week. They missed on earnings. And actually, one other one that we can take a look at is Zillow. This is a real estate software, provides pricing for rentals and company sales. And we can see today that the stock is up 21%, so it's back to being hot again. They actually had poor results, and they had a change in CEO management that caused the stock to drop. So one last area that we can take a look at are some of these food-related stocks, and there really was a theme here. It was all about pizza stocks getting hit. There's been a lot in the way of price wars among these various companies, so they are getting hit. This is Papa John's, PZZA. They're due to report their earnings next week. They've also had issues with their CEO and bringing in new management, but you can see the stock really is not in good shape at all. DPZ is Domino's Pizza, and they dropped here. These guys missed on earnings. Same store sales growth slowed, not positive when it breaks below not only your 200 but also your 50-day. Take a look at that volume. Even though we're seeing a little bit of a bounce here, this stock's going to take some work before being able to return. One last area is apparel related. We can take a look at JC Penney as an example. Prolonged downtrend. They're due to report earnings next week, continuing to decline, down about 5% this week. And one last one, CHS, that's going to be Chico's. This is another one, very prolonged gaps down on earnings, down 24% here due to poor earnings after reporting negative earnings. So they still have negative earnings growth going forward. 2019 analysts are looking for minus 56% growth, 2020 minus 21% growth. So can't say I would touch this or go near it. There's too many wonderful looking stocks out there.
So Mary Ellen, question for you. Would you then say, to summarize, that pizza stocks are among the yeast successes?
Bottom, I would have to agree. They're
Yeah, I never saw such. I never sausage.
You're so cheesy.
There we go. All right, now we've bored everyone with that.
Uh,
Yeah, I do. I mean, we've got the summary up there, but I was going to mention earlier when you were talking about the software stocks, with Trade Desk. I don't know if you could share some of what they're looking at going forward, but they reported last night. I talked about them earlier in the show as far as what they've reported. They did raise their guidance, but do you have any idea of what they're looking at in terms of their earnings growth going forward on TTD?
yeah, so they did come out with numbers. They were 102% year-over-year growth, 36% above estimates. So for this year, analysts have their earnings at 3% growth over last year. But last year, they had tremendous growth. So, but they are continuing to revise earnings estimates higher, and they beat, and it looks great. I mean, that's a beautiful breakout. And this is the kind of work that I do with MEM Investment Research. I'm looking at last year's winners, and a lot of them were winners for a reason, and they are continuing to outperform and excel this year as well. So that's a great hunting ground for those of you out there.
All right, well, before we get to the 10 and 10, I'm going to show you one other chart. And this is one that this company was doing okay this week until they reported after the bell yesterday. And you and I talked about this before the show, but stamps.com. Now, they came out and they lowered their earnings per share. First of all, I think they missed, but then they actually beat top and bottom line. Mm-hmm. But they lowered their earnings per share guidance going forward from over $10 a share to $5 a share. In half. And essentially the market said, okay, well, if you're going to cut that in half, we're going to cut your price in half, because the stock opened today at $90 from a close almost at $200 yesterday. So I think we probably can't go, we can't talk about what's not without at least mentioning this stock and the way it's performed today.
Absolutely. Yeah, it's down almost 60% on the news that they are no longer have an exclusive U.S. Postal Service contract. And boy, they're getting walloped.
Yeah, I think when you have the name stamps.com and you lose the Postal Service contract,
not a good sign.
Yeah, not good at all. All right, well, let's jump into the 10 and 10. I do have your first stock up here and ready to go. Hopefully you took a look at it, see what you all think. I'm actually bullish Intel. It's not my favorite stock in the semi space, but I think it's certainly improving. So what I highlighted was, first of all, the stock had really struggled since gapping down in July. It had struggled on rally attempts at about $50, and we saw this multiple occasions before, and then we would drop, and then we'd come up, we'd test it, we'd fail, we'd drop. But the last time we failed and dropped, notice we only came down to the rising 20-day moving average, and then we took off. On these prior times, the first time we went back up and hit 50, we were testing the 20-day from underneath, and we left that tail above, and then we came back down and continued moving down. The second time we went up and tested 50, we quickly pulled back and we lost that 20-day moving average before going lower. And now this time, this is when I start to talk about the character change on a chart. When I see a stock that goes up, tests major resistance, fails, comes back down, tests a rising 20-day, and then makes a breakout, to me, that is a completely different animal than what we saw at any point during the past several months on Intel. So I believe that this is now in a solid confirmed uptrend. And I think when you look down below, what you're going to see here is the semiconductor group has begun to strengthen, obviously off the December low. Intel is outperforming the semis and has been since back 5-6 months ago. And that has led to outperformance versus the S&P 500. But maybe the best part is that over the course of the last 2 to 3 months, we're beginning to see semiconductors outperform the S&P 500. They're not running away from the S&P 500, but they are outperforming after many months of declining. So I think we have a different character in play now for Intel on their chart. And I think the fact that the semis are doing well certainly is enabling Intel to build on its recent gains. I believe it's going to go back up here and challenge the $56 level and ultimately break out.
Yeah, it looks very good. Cognizant, CTSH.
Okay, CTSH. Well, this is where you expect it to hold for a couple of reasons. Let me annotate this. Overall, I think when you look at the relative strength down here, nothing exciting. You know, as I've said many times, I like to see these going higher from left to right across the chart so that you've got a strong stock within a strong group. This is not showing any of that. So I've got some reservations because of that. This is probably not a stock I would trade. But I do think here we had overhead resistance tested a couple of times just below 72. We continued down. Now we came back, and I think this was earnings related when we gapped down, held that rising 20-day, and then broke out. And now here we are back testing the 20-day and this price support level simultaneously. So this is an area where I think you could take a shot with the stock. If you're looking at it, you like CTSH, I would keep a fairly tight stop, probably the 20-day moving average on a close. Worst case, I would go down to the bottom of this really nice hollow candle, and I'm pretty sure that's with earnings. A lot of accumulation, a lot of buyers stepping in just below 70. So I think the 70, 72 area is pretty important on CTSH.
And then we have LUV, Southwest Airlines.
All right. Yeah, LUV, I think we talked about this one recently, but I can pull it up again. It has moved all the way back down to gap support. And I think when I talked about this, it was after this move down, and it's one that I'm keeping an eye on because they did beat top and bottom line estimates. They gapped up. And this is one that from a price support level, let me annotate this. I like the gap support, the top of gap support right there. And then intraday with all this volume, the selling went down to about 53 and then reversed. So that's where the buyers came in. So as we move down here, the volume's been pretty heavy. So I would be watching the recent lows or certainly post gap earnings gap lows at around 53. That might be 52.75, something like that. Whatever that low is, I believe we're now entering a support zone for Southwest Airlines. I would expect to see a reversal here. If not at the current price, then certainly by about 52.75.
Okay. Then we have Kronos, CRON.
Yeah, this is one of the cannabis stocks, correct?
You're right.
And this was the one that really exploded and I thought looked real nice. I was hoping we'd get a 20-day test on it. I remember looking at this back earlier. Well, I know we looked at it when it broke out here at 14 because I thought this was one of the most bullish looking charts in the cannabis area. The huge move up, great volume, sideways consolidation for several months, rising bottoms. Then we got the breakout above 14, which I thought was incredibly bullish. So looking at that, we could draw this line across. Hopefully you can see that now. Multiple tops failing at 14. Then you break out and look at the volume pick up. So you're getting that confirming volume. Now you can wait for a stock to come all the way back down and test support if you'd like. I kind of think it did that. It went from 14 to 16. It pulled back, hit 14, and then broke out again at 16. So I don't know that you're going to see 14 again. In fact, I think the 20-day test would be a solid entry on CRON. Expect a little consolidation. I mean, the stock had a huge run in January into early February. I wouldn't be surprised if we see some consolidation here between 19 and 23, 24 or so.
And the next one is Encana, ECA.
All right, ECA. I'm not a fan. I mean, obviously, if we can get the breakout above $7, that would help. I like the volume coming in. But when you look over here, first of all, it's in a group in the energy space that's not been very good. So when you look at ECA relative to its peers, it has been a laggard. It obviously has been a major laggard to the S&P 500. And look at its peer group relative to the S&P. So you got a stock that's an underperformer in an industry group that's an underperformer. And trying to make money in a stock like that, in my opinion, is very difficult. So I need to start seeing some relative strength. And the first thing I want to see really is a breakout above this resistance area. So I'm going to call it right around 710 or so. You can see had a little bit of a reaction high here, sold off from 710. Pretty decent volume going down. Now we're rallying back. Good volume, but that was the reaction high. And you can see we have not been able to get through that yet. So there's a real possibility we roll back over again since we're in a stock that's not very strong and in a space that's not very strong. So at a minimum, let's get a breakthrough 710 and let's see that volume continue to support the stock on the way up.
Okay, and then we have ZS. security, software security.
All right. Yeah, I kind of like what's going on here. I mean, a lot of sideways consolidation. It just broke above that August high. Only problem is no real volume to speak of to confirm it, but it has been performing well on a relative basis. You can see, and this is what I was referring to earlier, left to right, you want to see all of these charts going up, and that's exactly what ZS is doing. Now, because the volume really is not supporting this breakout, I'm a little concerned. But because it's in a great stock, I'd probably give it the benefit, or a great sector, I'd give it the benefit of the doubt. So I would be watching. There's your breakout. And again, when it finally made the breakout, the volume is just kind of so-so. But notice throughout this uptrend in 2019 that we have continued to hold the rising 20-day. Every time we test it, we bounced. So I think that's a good sign and one that I would continue to watch to the downside. Let's make sure we hold on to that 20-day.
Okay, and then we have ITB.
All right, ITB. All right, home construction, ETF. I've talked about home construction. I think that bottomed. I think we're now trending higher. This is, again, a perfect example of a change in a character change on a chart. So if I go back here, let's stretch this out to a year. No, we can do 2 years. You'll see the huge decline for a while and how we just continued to put in lower highs, lower lows until, in my opinion, we broke this high at around $33. I thought that was big. And also I had mentioned, this is a daily chart, but also if you looked at a weekly chart, I think you'd see that we really struggled for a long time to get back through the 20-week EMA. And now we're above it and we're trending higher. So I think that this is a long area, an area that I would be long. I think this is an area that will continue to outperform. And as you can see, this is the character change I was referring to. Now, all of a sudden, we're trending higher and we're holding the rising 20-day moving average each time we fall. Now, could we short-term top as we get up closer to 37? I think it's possible because we did have multiple tests here before we broke down. So I'm looking for this to get up to about 36.70 or so. And at that point, let's see if we can get through the overhead resistance. We may get one more pullback at that point to test that rising 20-day.
All righty. Then we have EXAS.
Exact Sciences, I believe, and maybe you can back me up on this, and I think they reported last night or this morning.
Yeah,
that for me.
They did. They came out with some good numbers, and the stock is, markets are liking it.
All right, so it looks like it gapped down just a little bit at the open, but it has been definitely being bought during the day. Volume already close to 2.5 million shares, and you can see that 2.5 million shares is a pretty good day in terms of volume, and we're just past the halfway point of the day. So this is a stock that's likely to show one of its biggest volume days of 2019, if not the biggest, and it's trying to make a breakout. A breakout, I think, would be bullish. If it fails to break out, then maybe we see a little bit more consolidation. I think I would be watching the recent, well, actually even today's gap. I think this area where it gapped down to today is pretty good support. So I think 82 to about 91 is your current trading range. If we get a close above that 91 today with this kind of volume, I think that's the real deal and likely to see higher prices down the road.
Very good. And then TXN.
All right, another big semi. Talked about Intel, so let's talk about Texas Instruments. Another one, I think it's just like Intel, really. It's breaking out above the prior highs, which clearly was resistance. And I'll draw that line in here. So there's your breakdown over here below prior support. We broke down, went below 102, and look at all the failed attempts when we come back up to 102. Here, got a little bit of a head fake, pulled back, lost price support, but never lost that rising 20-day moving average before we broke out again. Came back down, tested gap support, and now we're continuing to rise. I think the PPO looks good. Only thing I would say here is that maybe it's a little bit extended and the volume is drying up just a bit. So maybe if we're lucky, we'll get another pullback to test that rising 20-day just above 104.
And then we have AMRN.
Right, is that Amarin? Is that biotech?
Yeah, it's a biotech, ADR.
Yeah, I mean, it had the huge move back September and October and has just been trending lower for a while, but this is a nice bullish candle and volume picking up. Let's see how it closes today. But I think if it closes above that reaction high in early 2019, then I think we're in pretty good shape here. And that is right there. So the number I'm looking at is, or the high, the prior high that I'm looking at is right there. So this, it's hard to say what it is. Looks like maybe around 18 and a half. It looks like we're going to clear that today. We're at 1999 volume, 17.6 million, which you can see the volume has definitely spiked big time. I like this breakout. I think it's got a real shot here to make another move and test that overhead resistance at about 23, 24, 23. It's called 23 and a half. I think that's where AMRN is headed. Did we get through them all?
You did. Oh my gosh. Yes.
Oh, okay. I thought I was still missing one, but maybe I numbered.
Nope, you're good.
Yep, got them all. Perfect. So there is your 10 in 10. I don't know. Hopefully everybody that looked at Intel maybe has similar thoughts, although it is a market where everybody takes two sides. So who knows? Maybe it's maybe we got a lot of folks out there disagreeing with me, which would be fine as well. All right, let's take a quick look at what's going on in the market and just get a quick update. We do have the overall market higher. I'm trying to get this candle glance up for everyone. There we go. Okay, so let's see what's going on currently. And you can see the Dow Jones Industrial Average currently up 156 points, the S&P up 15, NASDAQ 53.5, Russell 2000 up about 11. So we've seen a little bit of a pullback off of the earlier highs. 10-year Treasury yield still a problem, down almost 5 basis points today, 2.64. You can see we're getting close to 2.63 support that's been holding over the last 6 weeks. If that fails, we could go all the way back down to that early January low, and that is just so strange to me that we could go back and visit those lows on the 10-year Treasury yield while the S&P 500 is charging back toward its high from back in September and October. That just doesn't seem to make a whole lot of sense unless we were looking at another round of QE, which is kind of how the market traded several years ago when we had the quantitative easing, because at that point we had easy money. The government, Fed, was buying treasuries, and so everybody was front running that, buying treasuries, sending the yield lower, and of course by keeping interest rates artificially low, that was helping the stock market as well. So back when we had QE, we had a 10-year treasury yield that was dropping, and we had a equity market that was rising. Outside of that, it's been kind of unusual to see this kind of activity. But anyway, it is what it is. Just reporting the numbers. Volatility index still just below that 14 level. I think this is good news for equity bulls until we see some sort of reversal in the VIX. I do not expect that we're going to see much selling in the market. XLK technology continuing to lead. XLC also still having a strong day. Staples, rough day because of Kraft Heinz primarily. Internet stocks, you can see bouncing off of the 1600 level. I think this is a key area of support right at the 20-day. And one of the beneficiaries in technology today, or maybe one of the leaders, depending on how you look at it, Intuit. Intuit came out with strong earnings and is up almost $15 on the day, which is, I don't know, 7% or so. Pretty strong showing for Intuit after a huge move up to begin with. All right, we are going to move into our final segment, and our final segment today is chart breakouts. And as you mentioned earlier, Mary Ellen, I mean, the market has been so strong over the last 7 or 8 weeks, so we got our pick of the litter here as far as going through and finding some chart breakouts. What'd you come up with today?
Yeah, actually, there are any number of stocks. And for those of you that follow breakouts and have been on the prowl for them, it's important to note that it is a very, very bullish sign for the markets. And from my work, even more bullish is the fact that a number of these breakouts are very nice, high-quality growth stocks. So that is always quite constructive as well. So I picked up a couple of names, looking at some of the better known stocks that are out there that are breaking out. The first one that we can take a look at is Visa. And there we go. So this is a daily price chart. I'm going to go ahead and pull up a weekly. We can get a little more perspective here. And what I'm looking at as far as a breakout is taking us back to this November period. And so the stock is breaking out of a 3 plus probably a 3.5-month base, and a couple of other constructive attributes. The RSI is trending upward above this net dashed neutral. And then this MACD has just had that positive crossover, black line up through the red above this net neutral 0. And the stock appears to be in a very confirmed uptrend, so quite constructive. The next stock that we can look at is a software stock, ADSK, that's Autodesk, one of the larger stocks. And we can see how it is breaking out of this very nice base here. The company is due to report their earnings next week. So if we can couple a strong earnings report with a breakout, that would be very, very constructive. Again, RSI trending upward, as is the MACD. And we can take a quick look at a daily chart to give, again, a bit more in the way of perspective. You can see just how long this nice base is, and it could very well be emerging from that. CBRE is another stock. This is a real estate development company, and it's had a very significant, this is very common among these stocks that bottomed at the end of last year and have had gone up nicely since then. But what we can look at here is the fact that the stock is breaking out of this nice base. We also have the double bottom here. RSI is trending upward. MACD is up above this net neutral. That looks quite constructive. Another one is PayPal. Similar to Visa, it is in the credit or payment processing space. PYPL is the ticker symbol. And this particular stock we can see is breaking out of a very sound base. It really didn't get hit as much as a number of stocks out there during the end of last year's deterioration. Analysts are raising estimates for 2019. They're looking for 19% year-over-year growth. The company did report their earnings back here at the end of January, but it's not until this week that we are seeing a rather decisive break out of this very sound base. RSI is trending upward, as is the MACD. And I think I have time for just one more. HEICO. This is an aerospace defense company, and the stock is coming out of a 5+ month base breakout. We're looking at 94. That would be your breakout price. RSI, very constructive. MACD, positive crossover above that net neutral 0. We've seen a lot of vibrancy within these defense-related stocks. I'll just pull up one last name and let Tom do his thing. Boeing is a prime example of a stock in the defense area that's already had a breakout and is continuing to advance.
Yeah, I think another one in that space too, Mary Ellen, if you want to pull up, is TransDigm, which is, I think, TDG.
Wow. Take a look at that.
Yeah, another one in that same space.
Whew.
Yeah,
the breakout and just moving right along.
Yep, and it's a smaller company. I think that company is only like about, I want to say $22 billion company from what it might be more than that now because it's gone up a little bit more, but.
It's actually 23 billion.
Okay. Yeah, and so it's a smaller play, smaller than Boeing. I mean, 23 billion, still a pretty good sized company, but for those who maybe are trying to look at something that might grow a little faster. I mean, Boeing's a great company, nothing against Boeing, but that TDG does present maybe a little bit better growth opportunity. I think they might be able to grow a little faster because they are a little bit smaller. Anyhow, we can take a look. Let's take a gander at Danaher Corp. So that's going to be my first one. And you can see after sideways consolidating here, Danaher for a while, we have broken out. Pretty nice volume to support the move to the upside. We have cleared that 111 level, 110, 111, which had provided quite a bit of overhead resistance back in October and December, and then also at the end of January, early February. We have finally cleared that, and it looks like this is a stock that wants to move higher. And once again, too, when you're looking at sideways consolidation, I use the moving average, the 20-day moving average, as a trend-following support area. So when you're going sideways, look at the 20-day. The 20-day really doesn't do anything for you. It just goes below the 20, back up, below, back above, back below, back up. Kind of get the drift. You know, in a sideways consolidation, you really don't see that 20-day helping you. When you get into a solid uptrend like this and you start breaking out, that is when the rising 20-day moving average can provide you excellent support. So I think we got a nice breakout here. And this is a stock that, from a trading perspective, I'd be very interested in it on a pullback to test the 20-day moving average. Not every stock, it might seem like it lately, but not every stock goes up the same. You know, if the market's up, there are some that go up, some that go down, and there's some that are going down that are really good companies and are in really good patterns. And it's a matter of showing that patience and exercising some discipline to allow those stocks to come back to you to get in with a more solid reward to risk entry. So anyway, Danaher certainly is one of those stocks. Next up is Ingersoll Rand, IR. And this is another one. Had the double top back in October and then again early December, failed. Now it is acting much more bullish, and it is trying to make this breakout. It hasn't quite made it. I'd like to see a little bit more volume coming up. But from a relative perspective, we're seeing the group, which is the DJUSFE, starting to show some better. This is, I think, industrial machinery. But this is a group that's starting to show strength. It bottomed back in October, and it has cleared that recent relative high. So over the past 4 months, we're moving higher. You can see Ingersoll Rand relative to the S&P has been moving higher over the last year. And versus its group, it's been moving higher. So again, this is a type of stock that would have my interest, especially on a pullback to a key support level. So IR was one. If you're looking for a defensive stock, I think Portland General Electric in the utility space, making this breakout here above the December high. And within the group, I mean, again, you can take a look, for the most part, moving higher on a relative basis, the group versus the S&P, which this is not a bad thing. I mean, we did pull back since December, but keep in mind, this is a defensive area. So you would expect it to pull back relative to the S&P during a strong market advance. Defensive stocks generally take a back seat to the more aggressive areas. But despite that, I think Portland still remains in a solid uptrend relative to the S&P 500. And you can see relative to its peers, it is one of the strongest. So the fact that we're getting a breakout in a stock that is performing well, you know, if you wanted to play the long side of the market, but you want to be a little bit more defensive, Portland General Electric here, this breakout, I think, might fit that bill. CLDT. This is Chatham Lodging Trust. And recently, I talked about how the hotels group was starting to look better. Well, the hotels and lodging REITs are also strong, and this is one of those. The CLDT, and it is just making a breakout above this top from back in July and August. And as it's making a breakout, look at its peers, still way below where it was back over the summer. So you've got a relative winner here in CLDT when you're looking at, again, a more defensive area of the market. I didn't want to concentrate just on the ones that are flying in the aggressive areas, because I know many of you like to be a little bit more conservative. You may be looking at more, at least some defensive names to be a little bit more defensive as the market has gone up so much. And I think CLDT is another one that fits pretty good. Now, this is what I was talking about, the fact that hotels and the hotels and lodging REITs are starting to show relative strength. You can see the bottom at the beginning of 2019. And even with the overall market doing well, this is a group in a defensive area that has actually been outperforming the S&P 500. So, and you can see all the other, everything else lines up pretty nicely. And again, we have that breakout taking place here. All right, Yum Brands. I've talked a lot about restaurants and bars, and I really like this group. Before I go into it, I do want to show one more time. I think I showed this earlier, but if anyone came in late, you can see restaurants and bars trying to make a breakout. And I wrote about it in my blog article this morning. If you get this breakout, this is a group that has been lagging. I'm going to come back to this. I want to pull up the chart, because this is a group. I think I have the relative chart in here. Maybe not. No, I didn't do the relative chart. There was your breakout. Let me go up here and do a relative chart, because I know in 2019 we have been lagging. So what you can do, This is maybe a little education moment for those of you who don't do these relative charts. But if you pull up your whatever you want to compare to the S&P 500, you just type the symbol in colon and then $SPX for the S&P, and we can pull it up. Now I'm going to go back and let's take a look at this over the last couple of years. I think line chart is much better than candlesticks when you do relative charts. And let's see here. All right, so you can see this is the little bit of weakness, but just like a stock that goes higher, it's okay to have a pullback in a stock. It's not going to go up every single day. Let's see if it holds on to this area of relative support. If it does, and we start to see a breakout again to the upside, I think the restaurants is an area that I would be interested in. When we were moving lower here and we broke above that 20-day moving average, notice also the PPO started rising here. I'm seeing a very similar type of setup. So if the restaurant group breaks out and you've got a relative chart that starts to break back out to the upside, then I think the restaurant stocks begin to make a lot more sense. So again, let's go back to Yum Brands, which is in that same category. And here, after gapping down, I think that was earnings related, if I'm not mistaken. But once it gapped down, it rallied right back, and you can see it has continued to trade higher, and it is in breakout mode. So a stronger group and a breakout in that group would only benefit a company like Yum Brands, which is already breaking out and leading to the upside. RCI, this is Rogers Communication. And here another really nice chart. Uptrend, you got equal highs, rising lows, a nice ascending triangle, and we just broke out of it. This measures up to about, I'm going to say about 57 3/4. So you still got a couple dollars left on this move to the upside based on the measurement. And you can see the PPO strengthening on this breakout as well. So those were the stocks I had, but I want to go back and show you on here the what I did to come up with mine. And I just went into the predefined scans. This is how easy it was. Predefined scans, I pulled up the New York Stock Exchange stocks that are setting 52-week highs. I sorted it in scooter order. And rather than start at the top, because you're going to get a lot of these stocks that we've talked about that are so hot, VMware, we just talked about, I think, with Julius. Keysight Technologies talked about yesterday. Mary Ellen was talking about Workiva or Workiva, WK earlier today, Sienna. Instead of going with those names, I went down and looked for the stocks that are breaking out to new 52-week highs with scooters below 80. And you can see that was where the first one I went over came from, Danaher. And the reason I use less than 80 is these are still pretty good scooter ranks, but they might just be making a breakout that could last for a while because they don't have a 99 rating. So they're not ones that have already gone to the moon. These are ones that could just be breaking out. So when you pull up a stock like Danaher, you see that it has been sideways consolidating for a while, and it has just made the breakout. So this is one that I think potentially could have a lot more upside than some of the others, where you might have to take on a lot more risk because the stock has broken out and has gone up for a month since breaking out. This one has just recently broken out. So we can bring up the summary on the stocks we just covered. And then after we do that, we will get into today's poll, which I hope everyone had a chance to take a look at and vote on, because thought we would, we talked about what's hot. We spent a lot of time going over what's hot. We just talked about chart breakouts. So I thought the poll might be interesting, and Mary Ellen, you and I can talk about it a little bit. But, when you've got, 5 groups, the market's been so hot. And when you've got 5 groups like these that are shown on your screen right now, these are groups that have lagged horribly over the past 2 to 3 months. And you look at them, obviously oil equipment services in that energy space, transportation services, drug retailers, tires, toys. As you look at these groups, is there anything that really sticks out to you as far as the group that might lead? Is there anything on the charts that suggests they might lead?
Are you?
It's kind of just a general question. I'm just wondering if you.
Yeah, it's hard. They're not particularly vibrant areas with in-demand products per se. I will say I'm surprised with the transportation because we are seeing a pickup a number of rail stocks, other transportation areas. So at some point, it would be with an anticipation that some of the transportation services, logistics types of companies would start to pick up.
Mm-hmm.
Yeah.
I think, you know, and when I look at transportation services, and I just pulled it up on my own screen, I can pull this up and show everyone in just a minute. But when I go into it and I look at the stocks that say over the last 3 months have really struggled on a percentage basis, the big one is XPO Logistics.
Mm-hmm.
I'm going to pull this up and just show, and I can show everyone how I got to this. But this is a big name within this space. It is a mid cap, but you can see down 27% or so, which is definitely pulled on the overall group. So if I pull up the Dow Jones U.S. Transportation Services Index, you can see that there's just not been, I mean, we had that nice bottom back in December and a little bit of a rally, but the last 4 or 5 weeks, this group, this index has gone almost nowhere, while the overall market has been very, very strong. And you can see we're nowhere near October highs, and yet the S&P isn't that far behind. So the question is, you know, are there any of these groups that, you know, might be looking somewhat positive on maybe a longer term chart? And
yeah, I mean, that Echo, ECHO, it's a smaller player in the space. It's under $1 billion market cap, but that one's it's trying to turn, but the numbers really aren't there to support it.
mm-hmm.
So,
yeah, I don't know which one I would go with, to be honest. I usually have an opinion, but I was trying to look at the charts, and I don't know, maybe toys, if it gets back down here and challenges this low because the PPO on the weekly charts turned up, maybe we might see a positive divergence. But I don't know.
They tend to be very cyclical, the toys, of course, with the holiday season. There is one stock in there, FNKO. That was a pretty big winner last year. It's Funko, and they 87% earnings growth last year. Wow. But it peaked back in September, peaked in price. Mm-hmm. But trying to turn. They're due to report next week, their earnings. But there again, it's under $1 billion. The big players here, of course, are Hasbro and Mattel. And I can see some analysts are starting to brighten up a bit as far as the prospects for these companies. Mattel, Barbie still alive and well. That hit last week on the what's up, but then it got hit this week. So hard to tell. I know with Mattel too, they have some movie related deals. Toy Story 10. No, I think it might be 5, but there are a couple branding and licensing items that might help them.
Yeah. Well, I mean, I think on this chart, Mattel, you bring up a good point. I mean, this stock definitely, I mean, it got close to its high from back in June recently, pulled back at that 20-day moving average and holding that. And when I was looking at that weekly chart, it essentially went above its 20-week and pulled back and is holding that, which is now starting to rise. So the overall downtrend here, the longer-term downtrend still remains in play, I think, on the stock. But of the ones that we've looked at, I mean, I think that is one stock, at least, that has shown some signs, big volume on the move to the upside, sold off, but some of that might have been some profit taking after such a huge move. Breaking back up, say, above 14 and a quarter or so would start to look pretty good here on Mattel. All right, well, I think it is about time to wrap it up. I do want to just quickly give everybody an update. You can see the Dow Jones still holding on, 146 point gain, but it is off the earlier high. And there on your screen, you can see the upcoming schedule. Thanks again, Mary Ellen, for joining us and providing us so many wonderful stocks. Appreciate it.
Always a pleasure.
All right. Want to thank everybody for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Be safe this weekend, and we'll see you back here on Monday. Happy trading.